Hello, and welcome to Finance, Business, and Investing. In this video, I want to tell you about a big chance that no one talks about. This chance, in my opinion, can make you a millionaire quickly and could even make you a billionaire if you want. I'm not really talking about cryptocurrency. Do I mean investing in real estate? Not really. Do I mean investing in stocks again? Maybe, but not really. What I'm really talking about is something that people see as a big threat or challenge to our economy or society, but they only see the threat part. They forget that it also presents a big opportunity. So if you want to see the whole picture, make sure to watch this video until the end so you can get the most out of it, and don't forget to like and subscribe. Now, let's get right to the point, guys. The Great Retirement is, in my opinion, the best chance in the coming decades. Now, the Great Retirement is often seen as a big problem because people are leaving the workforce and relying solely on pensions, social security payments, and so on. This puts a lot of pressure on social security. But they forgot to take into account the fact that the generation that is now retiring could be the wealthiest generation to retire today. Now, we have to admit that the baby boomer generation had a lot of chances. When they came back from the Second World War, they had to rebuild an entire economy that had been destroyed. They also saw major technological advances, like semiconductors that turned into microchips that we use in our electronics today. They also saw globalization, which was a huge boost to our overall prosperity. Can you make money by investing in places for people who need help living on their own or in apartments for them and other types of real estate? But we're leaving out something very important. The reason these people are so rich is usually because they had a car that helped them get there. One of those vehicles could be their real estate, which they might not want to deal with as they get older. For example, they might not want to deal with managing tenants or fixing things. Also, the government is putting out new rules about saving energy, so they might not want to do the repairs and renovations needed to meet those standards. This means that their property may be a problem, and they may want to sell it and put the money into a treasury note that pays them every month. You can look for that property and tell the owner, "I want to buy that property," and if you're looking for a way to get a monthly income, one way to do that is through seller financing. Now, with seller financing, you don't have to go to the bank to get a mortgage for the property, get the money from the bank to pay the owner for the property, and pay that money back to the bank every month. Instead, you cut out the bank and pay the owner directly. Instead of paying the loan back to the bank every month, you have to pay the owner. To become the new owner of the property, you make a monthly payment to the seller. How can you sell this idea to the seller of the property? Offer them 3 deals. The first offer was low, but it was for 100% cash, and didn't depend on financing. This means that you don't need approval from a bank to get a mortgage. If you have the cash on hand, you can pay it right away. The second offer is either a cash down payment or a down payment plus bank financing. There is a financing contingency in the second offer. Most of the time, this offer is higher than the cash offer but still less than what the seller wants. The third offer is one that includes selling financing or is entirely seller financed. This is the offer that is close to or at the seller's asking price. Having 3 offers is good because for seller is that he has the choice to sell or not. The good thing for you is fine. The solo has 3 choices, which can be used as a starting point for negotiations. If you only make 1 offer, the seller will probably just say yes or no. Best case scenario, the seller will make a counter offer. When you buy a home from an older owner, you usually don't have to worry about repairs that have been put off. It shouldn't be that way, but most people think, well, I'm not going to own that property for much longer, so why should I fix or replace XYZ? This makes the property a great fit for the BRRRR strategy, but that's a subject for a different video. Now, real estate investing might be one way they got rich, but they might also have built their world through their own business. The benefit of this is that there are usually systems, processes, and people in place to run the business in a profitable way. But because their parents were too busy running the business or because they had other interests, the kids might not want to run that business or take it over from their parents. In all honesty, I think one way to solve the problem is to put together a management team and just keep the new generation on board. The majority shareholder, but sometimes the owner might just want to sell the business or even think about shutting it down. Now is the time to step in and buy that business. In addition to your track record, you have the advantage that it probably won't be the hottest business or the newest tech venture. This means that there isn't a lot of demand and the prices aren't that high. Since you already have a history of cash flow, you can usually buy a business with the help of seller financing, bank financing, or other investors. Now, what I think is most important is that if you use this strategy well, you might want to take a real estate approach. For example, in real estate, the need for residential housing is a niche that can't be replaced. What do I mean by that? Well, if you look at retail buildings or office spaces, for example, the need for those types of buildings is going down because more and more people are buying things online and working from home. But people will always need places to live, like big apartment buildings or whole neighborhoods full of houses, no matter how the economy is doing or how much society changes. In business, people will always need to wash their clothes or do their laundry. If the toilet breaks or the heat stops working, people will usually fix it. This means that these kinds of businesses will always be in business, and have a steady cash flow. The most important thing is to have a business that can keep going even when times are bad. Now, what's the benefit of a business? Well, valuations tend to be more interesting because there's less demand than with real estate investing. This usually means that your money or the money you put into buying the business will be returned to you in the form of profits and dividends within a maximum of 5 years. This can be much faster, though, because when a business owner thinks about selling, he or she usually isn't looking for growth and new markets. As Grant Cardone says, he's not asking, who's got my money and wants my product or service. So, if you use the buy and build strategy described in the book Then Built by Walker Dybel, you'll end up with something like this. You can get your money back much faster. Now I've told you that you can become a millionaire by using these strategies and buying, for example, the right business or the right property. If you own that business or property outright, you can easily become a millionaire. It might be even easier if you buy a portfolio of businesses or real estate investments. But I also said you can become a billionaire too, and here's how. You can use the cash flow of that business you just bought as part of a plan to buy more businesses and make that cash flow go up and up. The benefit of this type of acquisition strategy is that the acquisition will usually pay for itself, so you don't have to use your own cash flow to pay for it. This means that you can invest the extra cash flow you make online however you want. For example, if you think your cash flow is secure and your business will last forever so you don't feel the need to diversify into safe assets like real estate, you don't have to. On the other hand, if you're more cautious, you can use that extra cash to invest in the healthcare industry, which provides medicine for an aging population, or in assisted living, which also focuses on an aging demographic. Anyway, this is just my opinion. Let me know what you think about it in the comments, and don't forget to like and share the video if you agree and like the content.